Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, December 2nd at about 1:30 p.m. Eastern. Well, equities are taking a dip today while the dollar is gaining ground and Treasury yields climbed again as investors bet on a more hawkish than expected Federal Reserve response to a strong U.S. jobs report, with employers hiring more workers than expected in November and raising wages despite recession worries. So on that note, let's go on to three charts that could maybe tell us a little bit about the week to come. As we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured the chart today, the SPY was trading at $404.81, or about $40.48 on the S&P 500 itself. It is now trading 15% below the SPY's all-time closing high. You can't see it on this chart. That was last January 3rd, and the all-time closing high there was $477.55. So again, we're now 15% below that all-time closing high, but at least we're out of bear market territory. So we've been watching, as you all know, probably, and certainly we've been talking about it the last few weeks, we've been watching this moving average, the 200-day moving average, the black line. It's a powerful dude, as you can see. And if you look left on this chart with me, you'll see that the last time the SPY was able to climb above the 200-day moving average were those March highs last year, March and April, where the SPY could finally poke up above the 200-day moving average, but could only stay up there for a couple of weeks, then fell back down through the red line, the 20-day moving average, the green line, the 50-day moving average, and then it fell to its May low down at 380, and its June low at 362, which we watched forever, or at least it felt like it. And then it fell back down to the gap down here that everybody had, the October low, and this on the SPY was $348.11. So today, and as we know, it tried in August, to move up and climb over the 200-day, but could not do that. It had a real quick little head and shoulders pattern here that did play out, and that's a top reversal pattern, a small one, but it happened. And indeed, the SPY dipped, tried to rally up with a throwback rally, couldn't do it, and then fell again really hard down to that October low, again at $348. So since then, we've started a kind of a grunt and groan rally, I want to call it. We're like, oh, goodness, please, can we do this? So the SPY started up the end of October, moved up over the 20-day moving average very laboriously, finally made it up over the 50-day moving average, and that's a good thing. Couldn't hang on forever, fell back down, and then started back up. Finally, the 20-day crossed over the 50-day, which is always a good sign, at least in the short term, and then price rose up. And once again, we're trying to get up and over this 200-day moving average. Right now, the 200-day moving average, and by the way, when it's moving down overhead, it can be very powerful price resistance. And it's doing a pretty good job now. Price stayed below this line until this week, this past week, Wednesday. As you can see, the SPY closed above the 200-day moving average. Thursday, it managed to do so again. And today, Friday, it's just hanging on for dear life. The 200-day moving average is coming in at $403.73. At this moment, the SPY again is coming in at $404.81. So it's kind of hanging on for dear life here. Then we can also draw There's a couple of little trend lines we can draw. Well, I'm not doing that very well, am I? The 200-day actually moving average is done pretty well. I'm not doing this trend line very well, though. The 200-day, the 20-day, I meant to say, the red line is doing pretty good for drawing a trend line here, but so it's coming in right now, the 200-day at $394.76. So that level here is very nearby price support. We've got $390, so right around in this $390 area, there is price support here. There is moving average support. If we look down, we know the 50-day moving average, which can be an important middle of the road or what do I want to call it here? Midterm moving average. That's coming in today at $380.29. So if the SPY, of course, we've got another Federal Reserve meeting in December. That always caused some anxiousness. If the SPY can move up and over the 200-day moving average and stay over it and make higher lows, that'll be great for the bulls. If, in fact, it cannot and it heads back down, then we're going to watch this 50-day moving average line, particularly as a fairly near-term support area. So I'm not, this uptrend here is not the most beautiful uptrend I've ever seen in my life, but it's here. Of course, we've had quite a few holidays here, and that does something. You can see that volume's down a little bit. So we have got to watch here, especially the 50-day moving average. And of course, this 348 line is our line in the sand here, but I don't think, hopefully we don't see that for a while. So are the lows in yet? There's a lot of dissension among analysts as to whether the October lows are the low or not. You know what? I stay in kind of patient territory here. I trade what I see, not what I think is going to happen. So please, again, please trade with patience and protect your capital at all times. Next chart today is a chart of the Invesco QQQ, symbol QQQ. Of course, the Qs represents the NASDAQ 100, a major index in our market, and that has the top holdings, including the big momentum stocks, the Apples, the Amazons, Alphabet, Meta, Netflix. All of the big dudes are in the Invesco QQQ. We know that higher interest rates can play havoc with tech companies, and that's one of the reasons why these momentum stocks, why the QQQ hasn't risen closer, like the SPY, up to its 200-day moving average. It's kind of stayed down here. I know a lot of people right now want to get into some of these very bruised momentum companies, the Amazons of the world. I don't blame anybody. I'm certainly not against nibbling. But is this the low? We don't know. Nobody knows that, nobody in the world. Now, today when I captured this chart, the QQQ was trading at $290.32. And that's about, we're still in bear market territory here. This is 28% below the all-time closing high, which was way back in November of last year. Of course, it's not on this chart. And that was November 19th at $403.99. So we're still in bear market territory here. We can see that it's good. The 20-day has crossed over the 50-day in the last couple of weeks. We've got that little bit of resistance here. The 50-day, again, is coming in at $226.62. So that's a pretty important line here. We've got the 200-day coming in at $305 and change. So there's going to be a struggle here, I imagine, for the QQQ to get over the 200-day moving average, which would be great if it can happen. Otherwise, I could see the Qs kind of trading here in a range between the 50-day down at 276. And for now, these highs up here, probably around 291 or so, and then see what happens when the 200-day moving average comes in. So I know that everybody wants to nibble here, nothing wrong with it, but if the Qs roll over and move down below $276, then we could see another leg down. And of course, we do have we do have these this low here at $255 from back in October. So be careful here. As long as the Qs again can stay above the 50-day, that's a positive thing. If they have to come down and break below 276, then we may see another leg down. So again, please trade wisely until we get some kind of a indication here, and please consider using hard stops placed. Okay, our third chart today is the S&P, the SPDR, I should say, S&P Metals and Mining ETF, the XME. The XME has 34 holdings, including Peabody Energy, Hecla Mining, Freeport-McMoRan, Steel Dynamics, Royal Gold, that whole group. When I captured this chart today, the XME was trading at $54.45. Now, it had a recent April high back here. Price rallied up pretty dramatically. It had an April high at $66.63. It fell down to the July low here at $39.83. So that's a pretty big move down. Fell to this July low, then rallied up nicely, pretty steep, but nicely. So rallied up here over the 20-day moving average, made its high in April up at $56.63, fell back down here to a low at $39.83. So it came down here, and I'm sorry, this was $39.83. Then rallied to the August high, as I just said, $53.86, then retested September low. But it didn't get all the way back down to 39. It stayed here at 40. So that's a good thing. Could this be a double bottom? Maybe. Double bottoms usually play out like that, like that, like that. And then it usually, with a good one, it will consolidate, kind of make a handle along one of these moving averages here, along price support. And then after this handle is usually made, then if things are all in good shape, price goes higher. Now, whether this is going to make a handle or not, of course, I have no way of knowing. But if in the coming week, the XME, and when I captured this chart today, the XME was trading at $54.45. It is trading above its 50-day, its 20-day, and its 200-day moving average. It's already moved slightly above this August high right here, back at about 53. So now it's up to 54. If in the coming week the XME can stay above the 200-day moving average, the 200-day is coming in at $51.14. So if the XME can stay above the 200-day moving average, I will add a small position. I'm going to scale in because this has already moved up a little bit. If the XME can remain above the 200-day moving average, I will add a small position to my trading portfolio. My initial stop is going to be under the 200-day moving average here at $51.75. If and when the XME can rise above its June high, which is back here at 57, I don't know if I can draw that all the way across or not. Well, pretty good. So if and when the XME can rise above 57, I will add to my position at that time. So you may want to keep an eye on the XME in the coming week. Now, please know that if you'd like to become a more successful trader, please check out my trader training programs. You can choose from 10 different online trainings like our flagship program, 7 Steps to Successful Trading. Everybody likes that one. And my simple strategies targeted to swing trading. That's good in the market right now if you like to just trade a swing and then get out. Trend trading, which is an awesome way to make money a little less stressfully. How to read charts, great for novices. 3 winning setups, absolutely good. And bottom fish like a pro, which we all know is a great thing to learn right now. These programs can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on the screen up here, or easier still, just click on the orange button below. Until next week, keep green on your screen. Be careful out there. I'm Toni Turner, and this is The Market Now.